Stavros Tousios for Info Markets, and today we're going to have two of the minor pairs into our analysis. And that one, the first one is going to be GBP against the Aussie and then Canadian dollar against the yen. GBP versus the AUD has actually broken below this very strong support level at 140.7461 and below the 38 Fibonacci retracement of the full upside leg. Now, the 50 at 171, let's say, rounding it up, it's the next major support. We might find a little sort of defense coming from bulls at around 172.15 here. As you can see, this is a swing low and could provide some sort of rejection initially, but then it's the 50. And then the idea here also, guys, is that we are looking at a very big hidden divergence signal to the downside here, right? Which suggests, being also in oversold territory, that the RSI, the momentum remains strong to the downside. And the RSI shows us that as long as we are in oversold territories, that is supposed to be heading lower down. Actually, even below the 50, that is supposed to just keep going lower down, with the 170, of course, being a major round level and 168.12 being the one after. Only if we get there, we can start, looking at the medium-term trend with a different eye a little bit. Now, what we could do here is draw this trend line as well, this channel, because naturally at some point a correction is going to come through. Now, we do have this impulsive wave to the downside, and maybe we're going to go closer to 173 for a bounce, okay? And then we will have to pay attention to the internal structure, okay? And if we assume we stop at 173, we look for 23 for resistance, 175 at 38, and all of them levels. If we receive rejections and signals from the indicators, that would probably suggest that there is going to be further continuation to the downside. Now, when we look at the Canadian dollar against the yen, and looking at specifically the 4-hour, that has actually fallen sharply since last October as well. Now, with these two in mind, okay, you see that we have also come below that level, and we are pretty much, let's say, a standard deviation away from the median line of the base channel, right? So it's very important to, of course, go and cross above that level. What I am particularly interested in here, and why we are visiting this particular chart, is that we have a wedge pattern down here, guys. And with a number of peaks and troughs respecting the pattern and looking like completing the pattern as well, I'm looking for potential upside toward, well, first of all, we need to break above that level, but then secondly, towards the top, which is around the 100. Okay, so we're at 95, 97.50. This is 250 pips away, and potentially a good sort of opportunity. Now, in the, of course, in the 4-hour, we'll have a bullish hidden divergence, and in the 1-hour, it's a bit more evident. So what I am suspecting is going to happen now, since we also have a short-term divergence signal over here, is we might start to consolidate and then do a pullback. Okay, so pullbacks in this particular case are expected to be opportunities to the upside, right? So the 96.58, it's a level, regardless of where the Fibonacci is, because it's a previous swing low. And then you've got the 50 and the 62, which is pretty much are just Fibonacci levels, because we don't have a swing low in this particular case. And in the very short term, you have 97.20. So now it's not so of course, sure that the upside leg is done here, because it could be, I don't know, it could give us another leg to the upside in the short term to take out the previous high at 98.30. But one way or another, the short to medium term sort of outlook, remains upward.